in partnership with CommSec.
Okay, let's go to Tom Piotrowski over at CommSec. Tom, how are we? It's a funny old week this week. How are we shaping up today?
Well, it's funny. I suppose market participants are ageing in dog years, Pete. That's another way of putting it. But I suppose what stands out at the moment is that there's an equilibrium of sorts that's been established for Northern Hemisphere markets in the last day as investors get to grips with the trade and tariff situation. So that's encouraging at the margins. It's just a question of whether or not that equilibrium has any traction. But as we speak right now, we've got the US markets up by a decent margin, particularly where tech stocks are concerned. The Nasdaq's up by 1%. The S&P 500 is ahead by 0.6%. The Dow just in positive territory. More of a focus on earnings last night where the US is concerned. Estee Lauder stood out with some disappointing numbers, Pete, and the shares fell by about 14%. But on the other side of the ledger, a company called Palantir, they're quite a sophisticated organisation when it comes to data management. Much better earnings, and the stock was up by 22%. So that's part of the reason why technology stocks were at the vanguard of the improvements. But we've got an interesting situation looming as far as the local market's concerned. Optimistic improvements expected according to the futures, up by around 0.75%. But we were saying this at the same time yesterday, and those improvements were frittered away over the course of the day. What will make the difference today is that the Chinese market, the mainland Chinese market, returns from the Lunar New Year break. The futures are pointing to improvements as they are for many other regional markets. So it's a question of whether or not they can consolidate, which will help the ASX 200 in that endeavour to at least hold on to those early improvements.
Okay, Tom Piotrowski, thank you.